Okay, so we're going to toggle between a couple different platforms to show you the Apple put that we had today, right? So let's just go down to the bottom that you can see that we were able to fully get out of this position at our nice profit. So at 7:55 early this morning before 8 o'clock, we were able to get out our 6 contracts at 460, locking us up a total profit of like $800, right? But on the day, 900 plus. And then we got this one towards the end of the day, just for good measure, right? If Apple opens up or gaps down, we make more money. Okay, so let's look at this real quick. So this was overnight, right? None of this stuff counts if you're doing options, right? We're just seeing the price action, right? I had one position and I was excited at like 4 a.m. in the morning because I'm like, okay, Apple's at 230. We should come up automatically $100, $200 just on that one position that we had, right? But as you can see, Apple's one of them finicky stocks where by the time the actual market opens, it can gap up, right? And in this case, that's essentially what it did. So not cash, but market opens up here at 6 o'clock. Cash open is at 6:30, right? I don't know why I keep clicking. Cash open is up at 6:30, and then as you can see, as we keep going, look at that. It looked like it was going to be down, and then boom, gapped up within 5 minutes, right? So I could have sold right here, but I didn't know it was going to gap up in less. Okay, same platform on Robinhood. This is just Robinhood Legend. Same thing for today, as you can see, gapped up. We got it around here, dropped down, we exited, and then didn't look at the position for the rest of the day until the end where we got just one position. Okay, so here's my Trader Sync platform. I filtered it from February 1st to the 7th, right, which is basically this week. The first trading day was Monday, which was what, 3rd. So this month, this is our winning position so far. This is the position that we're going to look at. So let's go ahead and look at that one. Boom, click over. Okay, so this is our put for the Apple that we had. This is the 235 put, right? We made an average return on each one of those at $134. Total return, right, was 804. We had the 6 contracts, right? As you can see, this is how we entered the position, basically scaled in. And this is a visual graph of it, right? This was our position that we held overnight, the one where we could have got out when the market opened. Let me see, we click to interact. When the market had opened, we could have got out, but as you can see, gapped up. Let me scroll up real quick. Perfect. 2 days, 15 minutes. Okay, cool. So we got one right here. That was for today. Then we scaled in and got our other positions. And then let me scroll down. Okay, just switched it over to the 2-day, 5-minute chart. So basically, we got in, purchase. Let's see if we can click those. Yeah, so we got in this first one. Does it allow me to see it? Oh, there we go. Clever. So we got 2 contracts at 310 for the 235 put, right? We got another one as it keep going up. Remember, we lose money on that particular contract if Apple continues to go up. So because it was continuing to go up, our actual contract was worth less, right? So we were able to get another one at a cheaper price. So we got this one at 265, and then as you can see, 266. But then when the market went down, or when Apple went down, we were able to exit out at an average price of 460. We sold all 6 contracts at once. Let's see if we can zoom in. Perfect. Yep, it went down. We got out. Then we were able to focus on the rest of our day because we were in and out of this trade less than an hour, right? Got in, got out, boom. Okay, so with trading, there are 2 options that you can look at, right? You got technical analysis, you got fundamental analysis. Fundamental analysis is where you're looking at the cash flow, the financial statements, income statements, right? And then you have technical analysis where you're looking at the RSI, right? Is it over 70? Is it over under 30, right? Is it overbought, oversold? You're looking at different factors, moving averages, exponential moving averages, VWAP, right? Those are technicals, right? So I never really conflate the two. So I'm looking primarily when I'm trading technical analysis. So here's one of the technical analysis indicators right here, which is the moving average. So in the last 5 days, Apple's moving average has been 232. In the last 20 days, 232 and 19 cents, right? So some of these things you can look at to make your decision. So when I go to the next same platform, but the next page, you'll see exactly what I'm talking about. So just remember the 5-day moving average is at 232.5. Okay, next what we look at is option prices. Now remember, you don't have to do all this. Sometimes you can wing it if you know exactly what you're looking for. So let me click the volume graph. So just think of this as left side, right side. Left side is all calls, right? These are the different strikes right here in the middle. The right side is puts, right? So people who want Apple to go down, they're thinking on Friday, because remember, this is Friday expiration. They're thinking tomorrow, okay, Apple's going to go down to 230, right? Or a lot of people have a large volume and open interest at 230, right? It may land somewhere right here, 232, right? Or 235. So the ones that we had was a 235 puts because I wanted to have more meat on the bone, as you say, because if it's landing in here, right, you're not really making anything if you got the 235s, right? But the more it goes down, the more you make, right? So we could have held these overnight, but as you can see in those other slides or the other platforms, Apple ended up going up. So the people who want calls, they think that Apple is going to stay above 230, above 232.5, and above 235, right? So that's what they're banking on. Um, these are the prices of the individual stock contract or option contract. Okay. And as you can see, for the puts, its highest that it went today was the 475. The low was 225, right? And it last traded at 225. But basically, you saw what we got our averages for, and you saw what we were able to exit out for at a nice profit. Okay, here's one of our bar charts, right? So you can see the same thing. And these are, this chart is based on today, 5-minute bar slots, right? As you can see, same thing, gapped up. We got it around here. We watched it go down and we were able to automatically get out of our position. So these purple lines, red lines, those are moving averages. This purple, light purple line, that's the 200-day moving average. So you got to realize you got some really smart people out there, some geeks. What they look for is for it to hit the 200-day moving average and then it'll bounce off of that, right? So knowing this information and looking at our technical analysis, what we wanted to do was get out of our position, right, before that took place. And that's exactly what we did. Since we knew what the 200-day average was going to look like, we were able to place our contract value at just the right price to get us out automatically. So that way we didn't have to take the risk on it bouncing off the 200-day average, right? Now, here's the other thing. Once it dipped below here, it could have kept going below, and right, and we could have made more money. But I said, okay, for this particular day trade, I like to lock up $900, right, and then not have to think about this stock for the rest of the day. And to cap it off, while we entered the position at right before market close, right, was based on our technical analysis. As you can see right here, around just close to 1 o'clock, right, it was shooting up, doing its thing. And then we were able to lock in just that one contract. We didn't want to get too many of them, right? So we'll see how that one plays out. As it stands right now, in the after hours, it went down. Apple went down, but you never know. It can easily pop up, as you can see these outliers right here. Okay, and just to cap it off, I appreciate everybody taking their time to vote on us or me doing this short video for you guys. If you like to see more, just keep letting me know. I'll go ahead and take the time out and create more of these short video explanations, right? But the goal is, like I said, is not to hit a home run every day. These small wins add up, and just for this week, we're up the $1,800. So I'll take that just for the wins. This is filtered by the wins, right? So we'll take those wins, we'll take the losses, right? But the goal is to continue to keep learning, right? And if we can profit somewhere between $1,500, $1,000, $2,000 every week, I would say we have a good month, right? Good luck out there. Keep me posted.